Stay ahead of the game with our weekly economic insights where we break down the latest financial news clearly and easily. Hi, I am Soumya. In today's video, we'll discuss the latest domestic and international economic developments to equip you with the knowledge you need to make better financial decisions. Today, we have important stories from the business world. We'll talk about the market regulators taking action against gaming apps offering virtual stock trading. We'll also discuss new rules for fund managers, partly paid units by investment funds, and the government's plan to raise money from both. Additionally, we'll cover how stock markets are reacting to the upcoming elections, food delivery apps trying to get more orders, and the LIC's possible entry into health insurance. Finally, we'll look at foreign investment inflows and India's economic performance last year. Let us start with SEBI's action on virtual trading gaming apps. In a significant move, the Securities and Exchange Board of India has taken action against gaming apps that offer virtual trading and fantasy games based on the real-time share prices of listed companies. SEBI has instructed stock exchanges and depositories to stop sharing real-time price data with third parties, effectively cutting off the data these virtual stock games rely on. This move has a wide impact on both developers and users. Developers must modify their apps to comply with the SEBI rules, possibly using non-real-time data or focusing more on educational content rather than competition. Users who played these games for fun might need to find new activities, and those looking for financial rewards from these games will be disappointed. This move protects users from having unrealistic idea about the stock markets. Moving on to SEBI's another take on AIF managers. To boost professionalism in the investment industry, SEBI requires at least one key member of an alternative investment fund managers team to have National Institute of Securities Market certification by passing the NISM Series 19C exam. This rule, effective from May 10th and to be complied with by May 9th, 2025, aims to enhance expertise in the field. SEBI aims to signal legitimacy, encourage lifelong learning, and build a pool of skilled investment management professionals. With this certification, SEBI ensures that AIF managers have the knowledge to handle complex financial tasks and manage investors' funds responsibly. Although some senior private equity and venture capital professionals might initially be skeptical, this move is crucial for positioning Indian fund managers as global leaders ready to compete with their Western counterparts. For investors, SEBI's mandate provides reassurance that their investments are managed by well-trained professionals. Now let's talk about RBI circular on AIF. The Reserve Bank of India has issued a new notification affecting foreign portfolio investors and alternative investment funds. This notifications aim to regularize the issuance of partly paid units by AIFs. While this move clears the way for future issuance, there are concerns about penalties for past issuance made before the regulatory clarification. The RBI circular states that previous issuance of partly paid units to foreign investors will be regularized through a compounding process, where AIFs must pay a fee to legitimize these units. However, the AIF industry is unclear about the fee amount, causing concern, especially if the fee is a percentage of capital drawdown, which could impact AIF operations. The move provides legal backing for such units after earlier regulatory gap. It offers investment security for foreign investors, though clarity on fee is needed. Let's have a look at IRDAI's new health insurance rules. The Insurance Regulatory and Development Authority of India issued a new circular on May 29th. Requiring insurers to decide on cashless authorization within 1 hour. Key things from circular. Insurers must decide on cashless request within 1 hour. Insurers must grant final discharge authorization within 3 hours, covering additional hospital charges if delayed. Insurers must comply with Ombudsman awards within 30 days or face penalties. Insurers are encouraged to achieve full cashless claim settlement with a deadline to implement necessary systems by July 31st, 2024. Dedicated help desk at hospitals and digital pre-authorization for cashless request. No claim rejection without review by a claim review committee. insurers to collect necessary documents from hospitals. These changes aims to improve service standards, enhance transparency and build trust in health insurance sector, ensuring better care and convenience for policyholders. Moving on to government's latest plan on asset monetization. The central government has announced plans to monetize assets worth rupees 10,000 crore this fiscal year to boost infrastructure development and increase private sector involvement in ports. The Ministry of Ports, Shipping and Waterways has submitted a plan for asset monetization to Niti Aayog, the government's central think tank. This plan includes 5 to 7 projects. This initiative is a part of a larger goal to increase public-private partnership in government-owned ports to 80% by 2030. The identified projects are a small part of the Shipping Ministry's pipeline, mainly focusing on large pending projects. Finance Minister Nirmala Sitharaman has urged the Shipping Ministry to speed up the monetization process, with the potential to generate around 14,483 crore rupees from 31 approved projects across 9 major ports. This plan aims to improve port infrastructure and efficiency for citizens and businesses by leveraging private sector expertise and resources. Let's talk about the stock market's reaction ahead of elections. As the Indian parliamentary election near their end, stock markets have surged, showing investors' confidence in political and economic stability. This is evident from sharp drop in the net value of market-wide open position on options, which fell from rupees 4.96 trillion on May 7th to rupees 91,149 crore on May 24th, just before the 6th phase of Lok Sabha elections. This decline indicates that the investors who had bet against a favorable outcome by selling call options are now covering their positions. This shift shows a regained confidence in political stability and economic policy continuity. However, the market's reaction on June 4th, the result day will depend on the ruling party's margin of victory. A clear win could boost investors' confidence, while a close result might bring uncertainty. Investors currently anticipate continued economic stability and growth, as political continuity is seen as positive for policy implementation and reforms. Now let's talk about why food delivery companies are focusing on customer retention. In competitive online food delivery market, Zomato and Swiggy are now focusing on retaining and maximizing the value of their existing customers. This shift comes as user growth has slowed. Zomato's average monthly transacting user base grew only by 8% in fiscal year 2024, down from 16% in the previous year. Similarly, Swiggy saw a 17% annual growth in gross merchandise value in early 2023, compared to 40% in the same period in 2022. Both companies are increasing order frequencies among existing customers to address these challenges. They use data-driven insights, personalized offers, and targeted promotions to encourage repeat orders from loyal customers. While this approach has its limits, as the customer base reached saturation, it allows optimization of resources and exploration of alternative revenue streams. For consumers, this strategy means more personalized recommendations, tailored discount, and better customer service, encouraging repeat usage and building long-term loyalty. Moving on to the LIC's big plan for the health insurance market. The Life Insurance Corporation of India is considering entering the health insurance market following a proposal to allow composite insurance firms. This move has sparked discussion about its impact on the competitive health insurance sector. LIC's chairman Siddharth Mohanty revealed that the company has begun internal groundwork and is looking at the potential acquisition in health insurance. LIC's entry is expected to increase competition and may lead to consolidation among existing players. Currently, LIC offers fixed benefit health products but not comprehensive coverage. Entering health insurance aligns with LIC's goal of diversifying its products and capturing more of the growing healthcare market. Given its large customer base and financial strength, LIC's entry into health insurance could mean more affordable and comprehensive health insurance options for consumers. LIC's move into health insurance is anticipated to drive innovations and offer more choices for consumers. Let's talk about FDI's interest in Indian stock market. India's economic performance last year showed its strength and appeal as an investment destination despite global challenges. Foreign direct investment equity inflows dropped by 3.49% to $44.42 billion in 23 to 24. However, FDI surged by 33.4% in the crucial January-March quarter compared to the previous year's period. This mixed FDI trend highlights India's ability to attract foreign capital even during uncertain times. The rise in inflows during the fourth quarter indicated renewed confidence among international investors in India's growth and investment climate. Despite a slower fourth quarter with a GDP growth rate of 7%, down from 8.4% in the previous 3 months, India likely ended the year strong. For domestic and foreign investors, these FDI inflows and economic performance affirms India's long-term investment appeals. The country's large consumer market, better infrastructure, and business-friendly reforms enhanced its attractiveness for foreign capital. Let us wrap up with this week's market performance. The Indian stock market started strong on Friday but ended the day with small increase. Both the Sensex and Nifty 50 indexes rose slightly ahead of the election. The Sensex by around 0.1% and the Nifty 50 by around 0.3%. The Indian stock market is buzzing with positive sentiments. Both domestic and foreign investors are actively buying shares. On May 30th alone, Indian investors purchased over Rs 13,748.5 crore worth of shares, while foreign investors contributed over Rs 18,108.69 crores. This strong investor confidence reflects optimism in the Indian stock market ahead of election. That's it for today. This week's Economic Insight taught us about the significant changes and plans across different sectors. Amidst all these changes, one thing remains the same. The financial world continues to evolve rapidly. So stay alert, stay informed, and most importantly, stay focused on managing your money wisely.